from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, President Biden sits down with the CEOs of Apple, Amazon, Alphabet, Microsoft, and more to talk about improving cybersecurity after a spike in destructive attacks over the last year. We'll bring you the very latest from the White House summit. Plus, Uber, Lyft, and DoorDash shares all up despite a big blow to their labor model. Early Uber investor Bill Gurley says the controversial ruling on Prop 22 will be overturned, and joins me for an extended conversation on everything from Warby Parker's direct listing to crypto to Robinhood, which he calls more of a casino than a trading app. And Bird scooters hitting the streets and the public markets. Our conversation with the company's CEO to talk about their SPAC and expanding into bikes. That's later this hour. We'll get to all that in a moment, but first let's get a look at the markets with Bloomberg's Kriti Gupta. Kriti, take it away.
Well, Emily, yet another record high for the S&P 500. That makes 50 record highs just so far this year. That's going to be the most record highs. I keep saying record highs to make sure our audience understands this is kind of a crazy year. We've seen them the most since all the way back in 2017. That's what this chart is showing. Every blue line here is a day that the S&P 500 once again hit a new high. But I want to show you what it did intraday today, because you really only drifted marginally higher, no major moves, and tech was the underperformer. It didn't actually lead the benchmark to those record highs that you really see. Even some money going into treasuries, or coming out of treasuries, I should say, as a result. Yields coming higher by as much as 6 basis points, ending the day higher about 4 basis points. I really want to show you, though, what big tech is doing on a broader standpoint, because today they may have underperformed, but on a 6-month time frame, compare them to those cybersecurity ETFs, which have really been in the spotlight today with that cyber summit that you heard over at the White House. Over the last 6 months, you can really see the global cybersecurity ETFs, ticker BUG and ticker Cyber, CIBR, outperforming the New York FANG index, those big tech gains that we've seen quite substantially in the past year. That's the blue line. They're not doing so well when you compare them to cybersecurity. So as we see that become a bigger part of the White House agenda, we can probably expect a little more of this action, Emily.
All right, Kriti, thanks so much for that roundup. Meantime, talking a little bit more about big tech, President Biden urged a group of CEOs to help improve cybersecurity across the nation's critical infrastructure and the economy, saying there's a lack of trained professionals to adequately protect the United States. Apple's Tim Cook, Alphabet's Sundar Pichai, Amazon's Andy Jassy, Microsoft's Satya Nadella, JP Morgan's Jamie Dimon, all in attendance. President Biden appealing to them for help.
The reality is most of our critical infrastructure is owned and operated by the private sector, and the federal government can't meet this challenge alone.
Our Rebecca Kern of Bloomberg Government joins us now from Washington with more detail on today's meeting. Rebecca, do we have any more specifics on what Biden talked about, what the CEOs mentioned about their priorities today?
Yeah, I think the biggest focus today was working on cyber workforce development issues. The administration talked about 500,000 open positions in the cybersecurity field. So expect some announcements from companies very soon. We're hearing it within the hour on cyber workforce training initiatives and funding. And then we also know they're talking a lot about critical infrastructure resiliency, where the biggest attacks have been on, we've seen Colonial Pipeline and JBS, the meat producer. So efforts for the government and the private sector to work together to prevent some major attack again.
So, obviously you had a lot of high-profile folks at this meeting. Any concrete action we expect to be taken as a result of this going forward? I mean, obviously the goal is shared, less cyber attacks.
Yes, unfortunately, I think the meeting is wrapping up momentarily, so I really do expect some concrete announcement from the White House any minute. We've been given a preview that, like I said, it's going to be focusing on probably workforce development issues, because they see the weakness there could be leading to some weaknesses in our cybersecurity across the industry. If we fill more positions, hopefully we'll be more secure is the goal. And I think another initiative that was announced earlier this month is the Joint Cyber Defense Collaborative from DHS. And they've already announced a partnership with Amazon, Microsoft, and Google to work on a joint cyber defense plan. So I think we'll hear some more details. Maybe more companies who attended today will join into that. JCDC is the acronym. Join in and hopefully partner with the government, because that's what they're looking for, is more solid public-private partnerships.
All right, well, we'll be watching for more details coming out of this meeting, potentially announcements from these companies involved. Bloomberg Government's Rebecca Kern, thanks so much for that update. Another headline we're following up just days after the FDA fully approved Pfizer-BioNTech's vaccine. Mandates are going into effect across a number of U.S. companies. CVS Health mandating shots for corporate employees and those working with patients. Chevron and Hess adding requirements for employees on oil platforms in the Gulf of Mexico. Disney announcing a deal with its roughly 40,000 unionized theme park workers in Florida. And Delta Airlines says it will charge workers who fail to protect themselves $200 a month. Bloomberg's Emma Court joins us now with more. That one may be the most effective of all, Emma, getting into workers' pockets. I mean, talk to us broadly about what we're seeing coming together at this moment.
Yeah, so sort of as expected, seeing this sort of official FDA approval really translating to companies feeling more confident about making these kinds of moves. We've already seen a lot of companies coming out with news around kind of mandating vaccines or having various requirements around vaccines, sort of carrot and stick approaches, even before that Pfizer approval on Monday. But now we're kind of seeing even more, and I think even more expected too. The Delta one is a particularly kind of interesting one because they're sort of citing within that the cost of hospitalization. $50,000. They're saying is how much it costs to someone who's unvaccinated ends up in the hospital, and they're sort of justifying that $200 a month charge in light of that, which is kind of a fascinating example.
So the Pentagon as well mandating vaccines. Talk to us about where you expect this to go. I mean, are we only going to see more of these?
Yeah, we're certainly going to see more of these. I think the question is, where do you draw the line? And recognizing, too, that this is, when you see an employer's reluctance to impose a vaccine mandate, a lot of that has to do with what do vaccination levels look like in their workforce, right? Can they mandate vaccinations when we know there are a lot of communities around the country where vaccine levels are incredibly low, and we know it's a tight labor market. So this is a really practical issue at the end of the day. If you mandate vaccines for your employees, will you be able to be a competitive employer? Will people leave over that? And obviously big companies can kind of lead the way on this, but ultimately there are also a lot of people in this country who don't have to answer to a big time boss at the end of the day. They're self-employed, they have a small business. So this is going to play out in a variety of different ways, but certainly employers can set the tone on this and are starting to.
And quickly, once the Moderna vaccine is fully approved, which we expect it will be, how will that change the mandates that we're seeing?
Yeah, I mean, I can only imagine this is going to add more emphasis to kind of the timeliness of a vaccine mandate right now. I mean, we've only had one so far, and there are already a number of big companies that have been emboldened to make these decisions. So you can only imagine it continuing, especially with hopefully approvals for other vaccines down the line too.
Okay, Bloomberg's Emma Court, thanks so much for that update. Coming up, we're going to hear from prominent Silicon Valley venture capitalist and early Uber investor Bill Gurley after a judge struck down that controversial California gig worker law. Plus, we're going to get his take on everything from direct listings to crypto to Robinhood. This is Bloomberg. Shares of Uber, Lyft, and DoorDash still up, all three keeping the positive market momentum following the reversal of a voter-approved ballot to let gig economy companies classify drivers as independent contractors. Prop 22 was passed last year with 58% of the votes, but last Friday, a California judge ruled it unconstitutional. Earlier, I spoke with Benchmark Capital partner and early Uber investor Bill Gurley about the decision and its broader implications.
I would be concerned about it from a societal standpoint, less about one in particular company. I mean, when you say Uber and Lyft, you leave out, DoorDash and GoPuff and Instacart. And guess what? There's 100 more behind them. Look at all the creator opportunities that are coming out. Freelance work is going to explode because the internet's allowing people with any passion, any special interest to be able to monetize that on their own time, on their own will. We get super excited when we talk about Zoom and the ability of white collar workers to live wherever they want and be able to, have a lifestyle that they love. This is the entry level position equivalent of that. So yeah, if our government decides to kill that, I think it's horrific. I think it'll drive inequality. Like, it'd be horrible.
So let's talk about a hypothetical. Let's say if Uber, Lyft, DoorDash, Instacart, all the companies you mentioned had to make everyone a full-time employee, W-2s and all, would they still have viable businesses? I mean, some of these companies are still not profitable, even with this model.
Well, that gets into another really great issue, which is you're going to dramatically drive up the cost of ride sharing if you do something like that, especially because remember, we're not only talking about incremental benefits, but if the SEIU has their way, these drivers need $420 extra to pay their membership due for the union, right? So it's adding on layer after layer of cost, in which will drive up the cost of ride sharing, which will then benefit car ownership relative to this, which then, impacts climate change, all these other things. Like it's a silly, look at all the problems we have in California right now, real serious problems, from wildfires to homelessness to, drug use, all this stuff. Why is this the issue? Like, and I think the thing that is really important to note, because I think we're seeing this play out in other ways. This will not happen nationally because other states are going to stand their ground. And so what you're basically going to do is have certain states where these things happen and other states where they don't. And we're going to see how it plays out. I don't think California citizens are particularly happy right now with how the special interests are getting their way in Sacramento and what that is doing to their lives. Ask the average California citizens how they feel about the teachers union right now. Look at the governor recall. I think there's a lot of change happening.
So what about the profitability question? Prop 22 and the driver model aside, Dara has said Uber will be profitable this year. Lyft has already done it. Are you at all concerned that Uber hasn't hit that milestone yet, and they're struggling to get drivers?
I would love to see Uber get to profitability, no doubt. I think you have to keep in mind that the ride-sharing business was hit by the pandemic, and most of the businesses that were hit head-on, where like 90% of your revenue goes away, are not profitable right now. And so, I do look forward to that day. Dara assures everyone it's coming, and I would like to see it happen.
Okay. On a lighter note, Kyle Chandler, the actor, has been tapped to play you in the Showtime series Super Pumped, and I have to know if you think that's good casting or not. Does he rise above the crowd?
I haven't thought about it from that perspective. My wife and myself are quite a big fans of the Friday Night Lights series, so I guess it could be worse.
Okay, good to know you approve. I do want to talk about what's happening in direct listings. You're a big fan of direct listings. Warby Parker just decided to do one. However, these still seem to be one-off events, one-off choices. Do you see the pendulum actually swinging where a significantly greater number of companies will choose a direct listing or a SPAC over an IPO? And if so, when does that happen?
Well, look, every time I see one of these, I'm super proud of the founders that are pushing forward, because it is just a smarter, more elegant way to take your shares public, and to not do it is actually to just to be subjecting yourself to a cashectomy from from a bureaucratic process on Wall Street. But the people that are choosing to do it are some of the best and brightest founders out there, and I think singly independent and confident. And I think the street's starting to see that.
So Robinhood did go the IPO route, and it didn't pop on opening day. I know you were expecting perhaps they might underprice it. So is that an example of a well-executed, well-priced IPO?
I don't know all the details of what happened. Obviously,
Okay.
it's way higher today than it was on that day. I think it's an odd example to think about from a comparison standpoint, precisely because they did so many things different, including adding the retail investors. But every time I have a discussion about this topic, I highlight that the data sets that I pull from, most of which were provided by Jay Ritter at the University of Florida, they look at all IPOs over a 40-year period. And so the underpricing for venture capital IPOs over a 40-year period is like 29%. And so there's no, using single companies. There's always an IPO that went way up, and there's always an IPO that went down. And it's not the right way to contrast what's going on. It's when you look at the wholesale data across very long periods of time.
So, meantime, just looking at your tweets, I've noticed you tweeting more about crypto, looking at crypto adoption, up more than 880%, according to Chainalysis. Where do you stand in this debate? Are you a Bitcoin or Ethereum or something else? Are you a maximalist or not?
I have to admit that I've kind of come late to this. I was busy focusing on direct listings and marketplaces and didn't spend a ton of time on crypto. In the April timeframe, I did dedicate quite a bit of time to listening and reading. And I have to say, I was swayed by the arguments of the Ethereum crowd. And so I've taken a personal position, not something at Benchmark. We are in Chainalysis, which you referenced. And I'm swayed by the Ethereum crowd. The parties that are involved there seem to be way more pragmatic. They seem to be open to change and are basically making several changes, which I think will bring down fees and will be very beneficial. The developer community is clearly in the Ethereum camp. I think there's a ESG benefit once they move to proof of stake versus Bitcoin. And so it seems to me to be the smarter way to play it if you're going to have crypto exposure. And please, I'm not a maximalist, and I'm not arguing that people necessarily should have a crypto exposure.
Well, speaking of a crypto exposure, I'm curious if looking at Robinhood, I was surprised. 62%. Doge accounted for 62% of their crypto revenue, which was more than half of their transaction revenue. Does that seem like a sound model to you?
No, and even prior to that, the majority of their profitability and revenue comes from options, because it turns out that this payment for order flow, which I am 100% against, I think it's a bastardization of our markets, and I hope the SEC makes it go away. But payment for order flow in options, because there's more obscurity and less price transparency, is even higher. So if you look at the Robinhood filings, they make about 4x the amount of revenue on an option trade than they do a stock trade. Why do I bring this up? Dogecoin and options trading, the company talks about democratizing investing, but there's no, if you study books on how people make money investing, no one will say, doing short-term option speculation is a path to success. I actually think it's a path to going broke. And so I would anticipate that they're going to have nasty churn just as a result of the fact that the people they're speculating, they aren't doing investing. You could highlight that a casino, has mostly losers and people keep coming back. I think that's a fair argument. But it does highlight that it is more of a casino and less of an investor platform.
Meantime, the pandemic is dragging on. You've got Apple, Amazon, huge companies pushing back the return to work until January. You've got investors still doing deals remotely. Having been in this business in Silicon Valley for so long, how do you see the pandemic fundamentally changing the way work is done here? Is this a real inflection point, and is it a good or bad one?
Yeah, it's a great question, and it's one that I don't think people have solid answers to. I think it's a work in progress. I think the competitive pressure to not go back amongst engineering is huge, and so I don't think anyone's going to be able to mandate it other than a very small company. And I think there's very significant implications for commercial real estate, which is not an area I invest in, but I think something pretty significant is going to happen there.
We'll, of course, be watching what happens there. Benchmark Capital's Bill Gurley. Now, as we head to break, I want to take a look at how Salesforce is trading after hours. The top maker of the cloud-based customer relations software posting strong sales gains. It also boosted its revenue forecast, signaling its acquisitions, including Slack, are paying off by offering customers more products. And the tech earnings continue Thursday, when we'll get quarterly results from Peloton, Dell, and HP Inc. We're going to have all the details right here. This is Bloomberg. Shares of space launch provider Rocket Lab did not take off in their first day of trading. It was quite the inauspicious start for the company that touts itself as the only direct competitor of SpaceX. Rocket Lab is trading on the NASDAQ now via SPAC after merging with Vector Acquisition Corp. It's now planning to build its largest rocket to date, called the Neutron.
I think a lot of people forget that we're not just a launch company, we build satellites too. We have multiple missions, and our team is flat out building 2 satellites to go to Mars for NASA, 1 satellite to go to the moon, and we already have 2 of our own satellites on orbit already.
Meantime, Alphabet's drone delivery business Wing is about to reach a new milestone. Any day now, it will deliver its 100,000th package to a customer. Its biggest delivery hub is in the Australian state of Queensland, where it set a new internal record of 4,500 deliveries in just a week. Wing, along with Amazon's Prime Air and UPS, is conducting tests in the U.S. as aviation regulators continue to wrestle with how to come up with rules for unpiloted devices. All right, coming up, the women's health market has a history of being very underserved. Maven Clinic is aiming to change that by bringing women's and family health services into the digital era. We're going to speak with the company's CEO and the Lux Capital partner who just helped Maven raise $100 million in new funding. That is next. This is Bloomberg. We are getting new information as the CEOs of the world's biggest tech companies leave the White House after discussions with President Biden about cybersecurity. Amazon has announced 2 new initiatives. The company will open the security training it's developed to protect its own employees from cyber attack to the public and offer a free device for multi-factor authentication to certain AWS customers. While Alphabet's Sundar Pichai said the tech giant will invest more than $10 billion over the next 5 years to strengthen cybersecurity, including expanding its Zero Trust program. Google also pledging to train 100,000 Americans in digital security skills. Now let's take a look at the market moves. Kriti Gupta joining us now. Kriti, what else are you tracking today?
Well, Emily, it was a risk-on day today, the 50th record for the S&P 500, but meme stocks, they did not get the memo. And when I woke up this morning, Emily, my morning hits were all about the meme stock frenzy making a comeback. They ended the day in the red, though, so you are certainly seeing some volatility as the rest of the investors, those Wall Street pros, really wait for that Jackson Hole Symposium. Something else I'm watching in the tech sphere, though, is going to be those Chinese ADRs. Remember a couple of months ago when Chinese ADRs, IPOs, SPACs, they were all the rage? You can see that in the peak earlier this year in January and February. Well, looks like they've lost a lot of that momentum, and a lot of people said, well, just give it till the end end of the summer, let some people come back to the trading desk. But Emily, it looks like it's not making much of a comeback. So from Chinese ADRs to IPOs to SPACs to meme stocks, where is the money going? The idea is that it seems to be going into biotech. If you look at the last 2 years, since the pandemic started, biotech in particular has been outperforming the S&P 500. This is going to be a really crucial element because it's not just the vaccine makers, even those kind of cancer therapy makers, they're all in on the trade. Something to watch as we start to navigate the rest of this pandemic, Emily.
All right, Kriti, thanks so much for that update. Now, Maven Clinic, one of the largest virtual platforms dedicated to women and family health, just announced $100 million in new funding led by Dragoneer and Lux Capital. The telehealth platform offers access to an on-demand network of fertility specialists, adoption coaches, birthing doulas, pediatricians, and childcare experts, with companies like Microsoft and Snap offering access as an employee benefit. Joining us now, Maven CEO Catherine Ryder and Lux Capital partner Dina Shakir. Kate, Dina, thank you so much for joining us. Kate, I want to start with you. Look, as a mom, as a woman, I know how unique this opportunity is and how everyone's path to parenthood is really different. What are the needs you are serving out there that aren't being met by other options?
I think, well, thank you so much for having us here. And I think that's exactly it, Emily. Each path to parenthood is so unique. And even one pregnancy is really different than another pregnancy. You know, starting the family building journey with IVF is just a very different experience. And so, you know, what Maven does is we have a virtual care platform really focused on filling in a lot of the gaps in care along the way, whether that's, you know, specialty support around nutrition, mental health, you know, lactation support after having a baby, return to work support, adoption support, so that as somebody is navigating the in-person system, you know, they have those core experiences, but Maven's really helped in the background, not only helping them navigate it, but then filling in a lot of the gaps along the way with the virtual care.
So you've got high-profile investors, Reese Witherspoon, Oprah Winfrey, Ann Wojcicki, Mindy Kaling, but dozens of investors walked away from this in the early stages. Dina, what did you see that other investors didn't?
Thanks, Emily. You know, women's health has been underinvested in and frankly under-innovated in for so long, and it is a major category in healthcare. Not only do women represent 50% of the population, but 80% of the dollars that are spent in healthcare. It is a critical wedge into changing outcomes in this country. And it also represents one of the biggest cost centers for employers. Employers who now are seeing attrition in the workforce, who are having employees experiencing mental health crises as they deal with working from home and taking care of their children and taking care of their parents. And it's time that women's health is now at the forefront of where it should be, at the center of healthcare. Maven Clinic emerged as the clear category winner in a space that is finally getting the attention that it deserves.
So, Kate, what are you seeing that works best on the platform? Where are users engaging most? Where do you see, you know, the most demand, if you will?
Well, I think what has been amazing to watch over the past 18 months with COVID, as so much of healthcare has shifted to virtual and telemedicine, is we've really seen just in general an embrace of telemedicine as one of the core ways to fill in these gaps. You know, we've seen our network utilization rise by 50%. And then in areas like mental health, which mental health is just so core to the family building journey, you know, we've seen a 300% spike. I think also as so many employers and health plans are stepping up right now to figure out, you know, in this time, what are other benefits that we can give, because this has been such an underserved area for so long. You know, really, we're also seeing, you know, a massively increased utilization in our care advocates as they're helping be those navigators to help our patients find the best fertility clinics, the best OBs, the best pediatricians, and even the best childcare vendors.
Now, part of the challenge is getting insurance companies to cover these kinds of benefits. And I noticed that, you know, most insurance companies, you can't use insurance generally, as I understand it, through the platform. Dina, how do you change that? And do you see that as a deterrent to future growth? Because that's going to be one of the first hurdles for people looking for help.
Absolutely. You know, one of the values that Kate and I and the early investors share is around health equity and health justice. And this is particularly important in women's health, where our country is experiencing a Black maternal health crisis, where morbidity and outcomes are unfortunately disproportionately weighted towards underrepresented communities. So whether it's employers or payers, it is critical that we have access to care in addition to quality care. And that is something that Maven has been working towards, and there will be some exciting news to come there, in addition to their incredibly fast-growing and robust employer business.
So, Kate, tell us a little bit more about that journey. I mean, getting the rest of the world essentially on board here, you know, getting these benefits covered.
Yeah, I mean, I think one of the biggest reasons to your question around health plans, one of the biggest reasons we were rejected early on is because a lot of the health plans weren't yet ready to kind of embrace innovation in this space. They didn't have a centralized women's health strategy. I think, you know, as we've kind of grown, as a lot of the data on our platform has really proven out that there's tons of engagement and that there's such a need for, you know, a lot better health equity. You know, one of the big things that we do on our telemedicine platform is that we cultural care match so that patients can talk to providers who look like them, who have their same race, gender, ethnicity, and we really give options around that to build trust. You know, that's an area where I think virtual care can really step up and support. And so I think what's happening, I'm actually at a healthcare conference right now. I think what's happening is that a lot of people are waking up to the promise of how digital health can come in and solve some of these gaps. And some of the biggest you know, players in healthcare, the health plans, the health systems, they really are looking more to partners versus just building or buying everything themselves.
And, you know, Kate, there are so many women entrepreneurs out there who are struggling to raise funding, who, you know, believe they have a great idea, can't get investors to listen. As I understand it, something like 40 VCs walked away from Maven in those early days. What was that like for you, and what advice do you have for other women, other entrepreneurs out there who might be going through the same thing?
You know, it's I think it could have even been more than 40. That was like one round. But basically, you know, entrepreneurship, so much of it is about persistence. And if you're seeing all of the signals, and for us, it was, you know, patients that we didn't have many, but they were really kind of loving what we were doing. We were starting to kind of get the signals in the market from the clients themselves, and employers often are, you know, some of the biggest innovators in healthcare, and they'll adopt new solutions first. And so we were seeing some of that early adoption. And so, you know, it was kind of, and the numbers, of course, are all on our side. This is the largest industry in the United States. That, you know, it was kind of like, all right, well, we're not going to quit. And so I think for the advice for founders is if you have all of that pattern matching and that signals that this can be something big, and you believe in your gut that like you're onto something here and the world needs it, keep going. There's, you know, and it's just a game of, you know, having a lot of supportive friends and family along the way, and an awesome team who can kind of, you know, help you through the rejections and keep building, you know, something really important for the future. A lot of the best businesses have had so many rejections. And so there's so many stories to kind of lean on to get through some of those hard times. All
right. Maven CEO Catherine Ryder at Lux Capital Partner Dina Shakir, thanks so much for sharing this with us. We'll keep following your story. Meantime, more details emerging in the lawsuit against Activision Blizzard. In an amended court filing, the California Department of Fair Employment and Housing alleges the game maker retaliated against employees who helped in its investigation into claims of sexual harassment and bias. The agency claims that involved shredding evidence. The World of Warcraft maker is being sued for fostering a frat boy culture where female employees are treated unfairly. Activision Blizzard has disputed the latest allegations and says it is working with investigators. Coming up, Bird Scooters expanding into bikes, hitting the public markets via SPAC. We're going to talk to the company's CEO, Travis VanderZanden, about the company's current valuation and the impact of the pandemic next. And from 2 wheels to 4, Balance of Power will be live from GM headquarters in Detroit Thursday for a special show. My colleague David Weston will be joined by a host of big-name guests, including GM CEO Mary Barra. Find out more about the automaker's EV strategy. You don't want to miss it. This is Bloomberg. Micro-mobility company Bird, known for those zippy scooters you can find in over 300 cities nationwide, has plans to go public via SPAC with a valuation of $2.3 billion. They're also branching out into two-wheeled vehicles and announced a new e-bike, the Bird Bike, with the electric bike market expected to hit $68 billion by 2026, and promises to fill city transportation gaps with the help while helping the planet. Will Bird deliver on its value? CEO Travis Vander Zanden joins us now for our City Lab series. Travis, thank you so much for joining us. So curious, obviously, as I've been coming back to work, I'm seeing more scooters on the road. What trends are you seeing out there as the world starts to reopen, but slowly in fits and starts?
Yeah, no, it's we're really seeing people want to get out of their houses. They want to rediscover their cities, and Bird is a great naturally social distance way to get around your cities. And we're really seeing, last year we were obviously heavily impacted by COVID, just like everybody else. But this year it's been exciting to see the strong bounce back in the numbers as people are, really looking to get back outside, rediscover their cities. Micro electric vehicles are a great way to do that. And, if you look at our Q2 numbers, we just put out 477% year-over-year growth on revenue. So we really are seeing that strong bounce back, which is great to see.
Some scooter companies, though, didn't make it through the pandemic. Skip, one of the first scooter companies in San Francisco, just filed for bankruptcy. What trends did you see through the pandemic? At the deepest, darkest point, did you still have that conviction that this was going to be part of the future, not knowing what the future would look like?
Well, look, for me, I really believe in a future of transportation, of the decoupling of the gas car. It started for me. My mother was a public bus driver for 30 years in Wisconsin. And so I grew up becoming very passionate about transportation. And I've always have been, super passionate about it. But, we're addicted to these 3,000-pound gas cars nowadays. And I really believe in a future of the decoupling of the car and more micro electric vehicles. So, I was always confident that once we got through the COVID period lockdowns, as long as cities don't go back into lockdowns again, I think, Bird, like I said earlier, micro electric vehicles are a great way to get around your city. And I'm continue to be very bullish on the future of not just electric vehicles, but 60% of all trips in a city are 5 miles or less. And I really believe micro electric vehicles are the right solution for those trips.
Now, you used to run driver growth at Uber. You were the COO of Lyft. Both of them have been struggling to get drivers back on the roads. Do you think that's a longer-term problem?
Look, we'll have to see if that's, if that's a transitory problem or if that's a long-term problem. I think for us, what we're focused on is just getting as many micro electric vehicles out on the road as possible. The great thing is, the vehicles aren't creating, the Bird vehicles aren't creating more traffic. They're not creating more carbon emissions, and we don't have to surge prices on the customers as well. And I think that's why you're seeing so many customers mode shift away from ride sharing during this period and onto, micro electric vehicles like the Bird scooters. And now we just announced the Bird e-bike as well, which we're super excited about.
Prop 22 was just ruled unconstitutional by a judge in California. And I wonder, as a company that doesn't have to deal with drivers, as contractors, do you see the legal issues facing Uber, Lyft, DoorDash, Instacart as being a long-term problem for their business model? I mean, are you happy you don't have to deal with those issues?
Well, look, I am happy that, with Bird, we have the electric vehicles that are out there. And in a lot of ways, we're the first driverless vehicle because the rider is the driver. And that certainly has simplified the business and allowed us to scale and certainly worked out better during the COVID times as people don't want to share cars. So look, I think it is going to be a long-term debate about the future of the gig economy. But, it's for me, I come from kind of a blue collar, union family. And I certainly see both sides of the debate, and I think the courts will have to, adjudicate this over the next few years, and certainly it'll be interesting to watch from the sidelines. But the thing I love about Bird is every year we're rolling out new electric vehicles, and those vehicles just keep getting better and better and better. And as a result, the economics of our business just keeps getting better as the batteries get bigger and the vehicles get more ruggedized. The latest Bird 3 that we rolled out is now lasting on average, if you look at early cohort data and extend out, over 2 years. And so the lifespan of these vehicles just keeps increasing. And every year the vehicles are getting better, which directly translates into better unit economics in the business.
Okay, Travis Vanderzanden, appreciate you expanding there. CEO of Bird will be watching those scooters on the road. Okay, coming up, securing the nation from cyber attacks. That was the theme of Wednesday's summit at the White House, where the CEOs of the biggest tech companies were in attendance. We will dive into the details next. And we're gearing up for the Federal Reserve's annual Jackson Hole Symposium later this week. We're going to bring you all the news and developments right here on Bloomberg Television as it happens. Plus, we'll be speaking with several Fed presidents, including Esther George, James Bullard, Loretta Mester. Stay with us. This is Bloomberg. Let's get back to our top story of the day, and the CEOs of the world's biggest tech companies leaving the White House after discussions with the president pledging to help combat cyber attacks. As we mentioned earlier, Amazon and Google have committed to new measures, including data security training. Microsoft just announced it'll invest $20 billion over the next 5 years to accelerate cyber integration and $150 million to help federal, state, and local governments upgrade their own security. For more, I'm joined by Jeanette Monfra, Google Cloud Director of Security. Jeanette, thank you so much for joining us. So Sundar Pichai was there in the room. So far, what are Alphabet's takeaways from this event, and how do you plan to help?
Sure. So first, as you noted, we've pledged $10 billion over the next 5 years to improve investments in zero trust, secure software, and enhancing open source security. Open source being a very important mechanism for ensuring non-proprietary solutions. We're also pledging through our Google Career Certificate program to train 100,000 Americans in fields like IT support and data analytics, learning in-demand skills, including data privacy and security. As you know, you can't do security without having all of those trained folks, and this is an important job market for Americans everywhere.
So President Biden seemed to put the blame on the private sector when talking about the fact that there just aren't enough people to fill the jobs that are needed to help protect U.S. infrastructure. What do you make of that criticism?
You know, I don't think the blame falls on the government or the private sector. I think there's work that we can do together to ensure that all the children as young as kindergarten are exposed to engineering and technology career paths that regardless of where they are, they have that opportunity. I think Google has done a lot to provide training and certification and pathways to get into companies like Google. I think the government has done good work in incentivizing at the community college, K through 12. So there's good work that's been done. There is a lot more that does need to be done. And I think it's also important to recognize non-traditional paths to security. So not necessarily just that 4-year degree from the elite institutions, but looking everywhere throughout our country for individuals who have aptitude, but maybe not the opportunity and can benefit from training.
You worked on the DHS cybersecurity team, and I'm so curious, what's the view from that's the other side of the coin, if you will, from inside the White House about what needs to be done and what's not happening?
It's interesting. I think the first, I would say I really commend the Biden administration both for having the summit. I was part of the team that organized President Obama's cybersecurity summit several years ago, so I know how hard that was, and hats off to all those government staff who worked so hard to make a successful event. But it's really, as you said, about those commitments. And that's why I think having the companies today, as well as the government make these commitments to continue evolving all of the foundational work that was done by previous administrations. Importantly, what I would really stress, which I did in the government, and now I see it so much clearer outside of the government, is the need to continue to invest in IT modernization. The government is continuing to defend indefensible systems that are decades old in some case. And so making sure that we're not just focused on cybersecurity, but also on the modernization.
Meantime, Google is working towards a passwordless future. I'm inputting passwords in to get into my information, dozens of times a day. When will the password be gone?
I hope soon. It is definitely something that we have to work to change that behavior. We've been doing a lot of great work on multi-factor authentication. I believe it's one of the most reliable ways to prevent unauthorized access. For those folks who used our advanced protection program, it's drastically increasing your account security. These are folks like elected officials, human rights activists, journalists, those who are targets. We've seen zero evidence of a successful phishing attempt on accounts enrolled in this program. So there are ways to do this. We're continuing to lead the way. And I do hope that passwordless future is soon.
As do I. Jeanette Monfra, Google Cloud Director of Security, thanks so much for joining us and bringing us the view from both Silicon Valley and Washington. And that does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow. We've got a great show lined up. Bumble CEO Whitney Wolfe Herd will be with us, as well as DJ and music producer Justin Blau, also known as Blau, to talk about NFTs and how it's transforming the music industry. I'm Emily Chang in San Francisco. This is Bloomberg.